Well, I think a lot of it was just listening. This can't be a private developer's project. It can't be a mayor's project. It has to be a community project. And that's the only way that this will be successful. And so because of that, you have to get buy-in from everybody at every level, not just elected leadership, but also the staff leadership, but also the community. And we had 3 different design charrettes where we brought the community in.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
David Wallace has been a real estate developer for 4 decades with a focus on public and private partnerships. David, welcome to the show.
Well, thank you. It's a pleasure to be here.
Absolutely, David. The pleasure is mine. I know I got to meet you here 2 or 3 weeks ago now at the Best Ever conference there in Salt Lake City. Certainly enjoyed getting to know you there a bit. But for our listeners...
Well, I have to tell you, I was so impressed with your pitch. You are a phenomenal pitch monster. I was so impressed.
Thank you. Thank you. I appreciate that. I had some good coaches before that event, so it was a lot of fun. David, there are 3 questions I ask every guest who comes on the show. 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Where did I start? I started in real estate development in Dallas, Texas. And that was at a point in time when the real estate market was going through the roof. And I thought I was a flat-bellied stud, could do no wrong. And then about 4 or 5 years later, the market crashed. And that was the next education. And that kind of took me into kind of workouts, turnarounds, doing basically just problem companies, problem real estate transactions. And where am I today? I focus on public-private partnerships, and that's what I enjoy doing.
That's a very interesting probably transition there. Maybe we won't spend too much time hearing about those early days of figure workouts. Hopefully we don't see much of that in the near talk of. I want to hear as much as we can because there's a short show, about 20 minutes. But let's talk about public-private part. When you say that to me, one thing I hear: black possibles that work just somewhere in the nether, things that don't.
Well, I'm not going to say that you are wrong, because it is very complex. There's no question about that. But sometimes I always say you don't know what you don't know. Sure. And so let me take a second and just give you a little bit about my background, and I think you will understand how I gained the knowledge to be able to do this. But I mentioned before that back in the early '80s, when I first got involved in real estate, it was a difficult time. And so I was thrust into workouts and turnarounds. And at that point in time, I formed a partnership with the Thatcher family from the United Kingdom. Our company was called the Grantham Company. Grantham, England is where Lady Thatcher was a member of Parliament before she became Prime Minister. And it was a 50-50 partnership where we would invest Thatcher money as well as other co-investments to really invest in troubled companies that were in bankruptcy, insolvent, and breathing new life into those companies. And then in 1990, when Lady Thatcher stepped down from being Prime Minister, I became her chief of staff, and I ran her private office and negotiated literary rights and things that, quite honestly, somebody in their 20s would love it. I loved every minute of it. But while she was at 10 Downing Street, while I was there, I was exposed to about $27 billion of privatization that took place in the United Kingdom. While she was privatizing British gas, British coal, British rail, British telecom, all of those things, effectively what it did was it was the state government doing an IPO. And then you had all of these thousands of owners, shareholders, and the state basically took that cash and paid off debt. So when she stepped down from being Prime Minister, there was 0 debt in the United Kingdom, which I would love to have that situation in the United States right now.
Wow.
But what that did was that taught me at a young age how the public and private sector can work well together. Fast forward, I became the mayor of the city of Sugar Land, Texas. And while I was mayor for 3 terms, I did about $3 billion of public-private partnerships on that side of the dais as on the mayoral side. And then I did about another 3 billion, or I have done about a 3 billion privately. And so I say that from the standpoint that it can really be good policy, meaning as a city, we now have the 2nd lowest tax rate in the state of Texas. And that's not just a coincidence. It's because anytime you can use private sector capital, ingenuity, economies of scale, efficiency, it makes the job better and more efficient for the stakeholders, which are your taxpayers. And so when you can bring a transaction to a city, when I can basically say, all right, I can bring a project. However, city, I can make this better. I can make it more efficient. I can make it generate more taxes if you can be involved, city. And that's how we basically get across the finish line. So I have done a number of those. And like I said, every single one of them, I can show you how it improves the city. And it's not just, quote, corporate welfare when a private developer is using city tax money.
That's really, really interesting. And I know there's some nuance to some of the probably even selling, probably, I can only imagine, had its own fair bit of resistance on the public side of things. Like, why are we bringing in private partnerships, things like that.
Right.
So maybe look back. I know you're working on some really unique projects right now, but what are some things, what are the types of projects maybe that cities look for? What are some things somebody should be considering when they're thinking about this? Like, what's just is there even a playbook for this sort of thing?
There's really not a playbook. I did write a book called Retail Development Through Public-Private Partnerships for the International Council of Shopping Centers. However, if you were to take a look at a situation where a city might have a blighted area, that would be a good opportunity for a developer to come in. And let me give you an example. In the city of Cincinnati, there is a mall called the Tri-County Mall. And 10 years ago, this mall was at 98% occupancy. It was generating significant sales tax, property tax, employing thousands of people. And as a mall that's doing well, it generates a lot of foot traffic. And because of that foot traffic, you have all of the other big boxes, the Walmarts, the Costcos, the Targets, that want to co-locate. However, because of Amazon, because of COVID, because of people wanting to go to more lifestyle-centered retail, they don't like going to malls anymore. So this mall that I'm referring to went from 98% occupancy to 18% occupancy. Dillard's, Sears, Macy's, JCPenney's all shut down, and it was 18%. And because of that, they had over 10 different big boxes that were around it that shut down. So that is a blight on a community. It's not blight by way of crime and a desolate looking situation, but from an economic standpoint, it definitely is. So in that situation, we went to the city and said, we will buy this mall. However, in order for us to buy this mall, here are the type of incentives that we need from the city in order for this project to get across the finish line. And that's where the public-private partnership was created. And when you have a win-win situation, when the private sector doesn't take advantage of the city and it doesn't happen the other way around, if it is a win-win situation, it works for everybody. And now, as we are moving forward on this project, we are about to do about $1 billion redevelopment of a mall that was sitting there almost vacant. And in the end, we'll end up having about 2,600 multifamily units, about 500,000 square feet of office and retail, about 600,000 square feet of restaurants and experiential type of entertainment, hotel, motel, all of those different types of things, in addition to green space and creating a real live, work, play, recreate type of an environment and breathing new life into the city. And that's what we're doing. And that is a success of a public-private partnership.
That's really, really cool. I guess when you went to the city, I mean, one, you had to find, I'm just thinking through this high-level view, but then you kind of had to time all these things out where even getting through the underdo, if they at all, that sounds like a several.
Well, you are correct, because there are a lot of projects that most of the time when you are ready to close on a project, you're into it a year and a half later, because many times there are things that you want to have done. However, when you have a public-private partnership, when you have a willing city, if you will, which is what we had, I will tell you that from the first time that I visited Cincinnati until when we had a major PUD modification, a development agreement, a school compensation agreement, and a $200 million tax increment finance district, which means we are getting $200 million of a grant from the city. We do not have to pay it back, $200 million. We had all of that executed in less than 60 days from the date that I first set foot in Cincinnati. And part of that was we told the city that we have to go firm on about $500,000 of earnest money, and we are not going to do that unless we have these approvals from the city. The city moved heaven and earth in order for us to be able to get to the point that before our earnest money went hard, we had all of those approvals. And that is the type of a supportive city that you want to be able to work with to create a successful public-private partnership.
Wow, that's amazing. $200 million out of, so you get a 20% prod given to you.
Yeah.
Money from
Yeah, it's interesting. There are over 700 malls across America that are in this identical state.
Wow.
So there's a lot of what I would consider opportunities. And I don't mean that when a man's down, you kick him, but these are opportunities to invest in. There's nothing that we can do, obviously, to change the retail spending habits of people. However, to the extent that we can go in and work with an existing infrastructure, that is great. And when I talk about this mall, it's on 75 acres. Most malls across America are one of the best locations because they're typically high traffic areas. We have over 200,000 cars a day going right by this mall. We've got 1.2 million square feet of concrete that was basically leased. At one point in time, there's 2 large parking garages. I will tell you, for a mall that's at 18% occupancy, the parking garages are worth zero. And effectively, we paid zero for it. But that's worth about $80 million to us that we don't have to spend that money. And that's what it would cost to rebuild 2 parking garages. And we only paid like $35 million for the entire mall. And so that we have a lot of what I refer to as in-place equity in addition to the grant funding.
What are some things from the city's perspective? So I understand the grant side of things. That's really cool. I love that. What are some things that you proposed to the city that said, hey, here's some things that's going to make it work for you in order to give us this grant on the front end?
Well, I think a lot of it was just listening. This can't be a private developer's project. It can't be a mayor's project. It has to be a community project. And that's the only way that this will be successful. And so because of that, you have to get buy-in from everybody at every level, not just elected leadership, but also the staff leadership, but also the community. And we had 3 different design charrettes where we brought the community in to make sure that what we were putting together met their goals. And so because of that, it enabled us to be able to move forward on a plan that the city wanted. The city wanted a new community center. We basically said, we can do that. The school district wanted to create a STEAM institute, science, technology, engineering, arts, and math. We said, great, we can do that. And as we continue to move forward, the one thing that I found very interesting is that there effectively was a 30-year moratorium for multifamily in the city of, it's a suburb, it's called Springdale, in the city of Springdale. And so because of that, the average age of the citizens was about 8 years older than any other surrounding city. There wasn't a housing stock when people went off to college for them to be able to come back. And you never want to say that you want to socially engineer a city, but the city leadership said, we want entertainment. We want to be able to bring millennials, Gen Z, we want these people to be able to come back into our community so that instead of the people going off and never coming back from college, we want them to be able to come back home. And so that is what we are creating. And much of that was we just listened to what the city's goals and objectives were. And now we're moving forward to execute on those.
That's really awesome. I love that. Tell me maybe some of the real challenges maybe that you see inside of this, maybe some common hurdles that you said, here's some things to think about that will help you if this is a direction you're going. Obviously, you need a large project. You guys, you have the development experience, you've got the background, the financing. I mean, you've got the infrastructure to move a project like this forward. But even before you get to that, what are some things somebody should be thinking about just as they consider? Is that question?
Sure, it most definitely does. And I will tell you that having been on the mayoral side of the dais as well as the private sector, that helps quite a bit because I feel like I can appreciate and relate with the other side. I can sit down with a mayor and council and I can say, here are the political landmines that you will have, because I've had them. And as a private developer, I can also look at it and say, city, in order for us to be able to make sense of this project, here's what the support that we need from you as a city. And so there are a lot of political landmines. I will tell you that in any city council, you are going to have people that are sitting in the front row basically saying, what are you doing? Why are you doing this? Why are you supporting this particular developer on this mall when you did not support my brother who's a developer or somebody else who's a developer? And it comes down to understanding economic development. and economic development tools that are out there. I mean, I will tell you that when I was mayor, we instituted a policy that basically said if we are ever going to invest capital, meaning if we're going to give somebody a rebate of tax, if we're going to give somebody a grant, if we're going to give somebody a reduction in their tax payments, or any other type of an incentive, we need to get at least a 10% internal rate of return on that money. And so if we're going to give somebody a $15 million grant, we want to make sure that every single year we're going to end up getting, at least $1.5 million, with a present value factor back to the city. And that may be backed by way of job creation. It may be backed by way of hotel occupancy tax, sales tax, property tax. It's that net increment that we're creating. And that is the way that most cities need to look at this. And it's not a handout. Some people think, oh, well, a public-private partnership will make a bad project good. It does not. It never makes a bad project good. It just makes a good project get better and get done quicker and get to the finish line so that you can start providing the quality of life goals that you want for the city.
That's fantastic. Yeah, I mean, because those are things you have 40 city level,
right.
Big component, big face out.
Right. Yeah, development is hard, finance is hard, economics is hard. And then when you throw the curveball of a city council that doesn't necessarily have a backbone made of steel, and they're pretty pliable when it comes to listening to the whims of one taxpayer versus another group. And so you want to make sure that you've got a consistent group of partners with you as you're moving forward. And quite honestly, that's one of the first things I will look for as I'm moving into a city. It has nothing to do with the demographics, has nothing to do with the psychographics or anything else. It just has to do with the firm, strong backbone of city leadership and making sure that their legs don't go wobbly on them as things start to create problems. And I guarantee you, in the development business, there will be problems along the way. And you want to make sure that you've got a very solid partner with you.
Right. How do you face that in the light of changing city count mid-project?
Well, that's a good question, because I have had situations where that occurs. What you typically end up doing is you have a lot of what are referred to as development agreements. So you enter into an agreement with the city and you try to spell out all of those types of issues that might change with the whim of a council.
Right.
Because the last thing that you want to do is spend millions of dollars on architect design, and then all of a sudden you have a council that changes and said, well, no, we did give you a 10-story height limitation, but we decided to change it to 8. So you want to make sure that all of that is nailed down and that you have that in agreement. And once it's in a development agreement or a major PUD modification, a plan unit development modification, at that point in time, it's very difficult for the whims of a council to change. And and like I said, that does happen. And especially in the politically charged environment that we find ourselves in today, you may have somebody that you think is a sure person that's going to be reelected, yet with the internet, with the social media that's out there, people's lives from a political standpoint can change at the drop of a hat. And like I said, I've seen it personally. I understand politics. I understand how it can be very difficult. So
no, that's absolutely great. I know we've got just a couple minutes left. I want to hear maybe a little bit more about this mall that you're turning into. What your guys' timeline for development, just the grand scale, start to finish, like, just talk to us about that.
Well, I appreciate that. Thank you. We are at a point now where all of our demo plans and abatement plans are done. So we'll probably start that within the next 2 to 3 months. And then with about 3 months into that process, we'll start all the site and civil work. And the unique thing about this particular project is that we've got 2.7 million square feet of steel and concrete that's out there. And that includes the parking garages. It doesn't include any asphalt or anything. We are preserving north of 2.4 million square feet. Most developers would come in and say, let's just raise everything, take it down to dirt and start over. We look at it from the standpoint that saves 2.4 million square feet of steel and concrete in the landfills in the state of Ohio. It enables us to be able to be socially conservative, if you will, about what we're doing to the groundwater. We've got bioswales, we've got energy efficiency, solar that we're incorporating, EV charging stations, all of those underground cisterns, all of those things, so that one would look at this and say, we are doing everything that we can from an environmental standpoint. And not only is it good for the environment, but as I mentioned, to the extent that we can convert Dillard's into a multifamily project, to the extent that we can convert JCPenney's into an entertainment venue, that's exciting as opposed to tearing it down and just starting over. And that's the approach that we're taking. So we should start construction on all of the vertical construction and first assets being delivered at the end of 2024, beginning of 2025. So stay tuned.
That's fantastic. What is the name of that project? Follow.
It is called Artisan Village. We did a lot of research about this location, about the Indians in this particular location. There were a lot of artisans that basically settled in this area. And so whether it was a shopkeeper, whether it was a blacksmith, a saddle maker, whatever the case may be, they were all artisans. And that's what we're doing, is we're continuing that. And hopefully that will continue for the next couple hundred years as well.
Fantastic. David, thank you for coming on the show today. I do appreciate it. The pleasure certainly was mine. I had a great time, of course, connecting with you again here today. If our listeners want to get in touch with you, learn more about the art project or anything else, what is the best way to do that?
My email address is david.wallace@dgwconsultants.com. And I would love that. Thank you.
Fantastic. We'll make sure we put that there in the show notes. Again, David, thank you so much. I appreciate your time.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.